Welcome to the December 2025 monthly update for the CPF Property Debt Fund and the CPF Real Estate Credit Fund. My name's Joe Christie, and joining me today is XanderRyan.
How you going, Joe?
Yeah, good, thank you, Xander.
All right, well, we might start with Spring Creek. We've got 4 loans at Spring Creek Stage 6 and Spring Creek Stage 7. And then they're building residential land lots. And then we've got 2 land loans in Spring Creek East and Spring Creek Land. Progression continues to go well at Spring Creek. We had our final draw for Spring Creek Stage 6, so there will be no further draws for that. And that will be looking to repay in around February next year. So a bit earlier than scheduled, just because of the pace they're going at Spring Creek. But it's all going well there, and we look forward to new stages at Spring Creek.
Absolutely.
Can you talk a little bit about Walloon, Joe?
Yeah, thank you, Xander. So this one is located near Ipswich in Queensland. It's 15 rural residential land lots, so they're quite large at 4,000 square metres. Construction has commenced and they're progressing well. So that one we're on track. We've got our own client side development manager who's attending all the regular monthly site meetings. So look, nothing too much to report from that. Paying 10.5%, first mortgage secured at 65. What's not to like?
Yeah. Moving on to Park Hill, Toowoomba. So this is a 47 land lot subdivision. We've got a first mortgage that's paying 11 and a second paying 18%. On the 25th of November, we rolled this over for another 6-month extension. So all the unit holders in Toowoomba received an email and had the option to either opt out or go for another 6 months. And we're very pleased that most did roll over and go for another 6 months. So there'll be further construction draws for Toowoomba in the new year for those who are looking for first and second mortgage. And
look, the only real update on that is, look, construction's progressing well, but they've got 100% pre-sales.
Yeah, that's correct, yeah. So yeah, a cracker really.
Very good one. Port Douglas, thank you, Xander. Look, it's 22 completed residential land lots, paying 10% per annum. They have had a few sales in the last month, which is good. So they've only got to sell down, I think, 9 of the 22 land lots to be repaid in full. I think they've received circa 3 or 4 sales, so progressing.
Yeah, and Terry McKinnon loan, first mortgage, paying 10%. Lots like that.
Yeah, absolutely.
And then I'll just touch on Musgrave. This is one of our splitters that we've done. So we've got a first mortgage paying 10% and a second paying 18%. On this block, they've split it one block into 3, and they've got offers on all 3 of those. So that'll be repaying in the new year around January, February, and a real crack of a loan.
Yeah, that's a very good one.
Do you want to talk a little bit about the childcare portfolio of Brookwater?
Yes, thank you, Xander. So Brookwater, again, located near Ipswich. It's got a really good quality operator that's developing this particular project. There's a little bit of medical mixed in with this facility, but broadly speaking, it's a childcare centre. It's got an agreement to lease with a reputable childcare operator. And look, the only thing we're waiting for there, they've got all their planning approvals. We're just waiting for their building certificate to come through when they can start construction.
Yeah, and that's got a first paying 10.5 and a second paying 18%.
Yeah, very good return.
Moving on to Paddington. So this, for many of you know, this is a completed childcare centre and underground car park. We were planning on doing the future stages of Paddington. They're going to be building some apartments and hotel there, but we thought that we've done a lot of work into this line, and we thought that the next stage just isn't for us.
No.
So it's going to need a slight extension to January, where we're going to be refinanced out by another financier. So
and the reason that is it's just too big for us. I mean, it's about $30 million loan, and it probably needs between another 20 million to get it done, which is probably just too big for us. So it will be refinanced, I believe, early January 2026.
And we'll be providing an update on that shortly, to like a written update to investors. And then, Joe, do you want to tell us a little bit about Tingaupa?
Yeah, thank you, Xander. So, as the slide says, it's 21 industrial land lots, all complete, all sold. Should have been repaid probably a month or so ago, and there's been a delay. And that really the delay has been with council and getting plans sealed. We believe that the borrower is pushing council as hard as they can, and latest word was that the approval or the sealing was imminent, and once the plans have been sealed, they can go to land titles office and get titles issued, and then repayment occurs. So look, I'm it's still yielding 10.5%, completely de-risk. Given that it's all finished and sold down. I wouldn't be surprised if it repaid before the end of the calendar year, but I wouldn't be promising anyone that it may come in the early new calendar year.
Yeah, but fingers crossed. And Mark is, out of everyone, Mark, the developer, is the wanting to get it repaid. He's on the clock for all the money, so he's working as hard as he can and pushing council as much as he can to get it all done. So, but still, it's still paying 10.5 and 18 and ticking along.
And all completed. So
exactly.
it will repay.
Yeah,
it will repay. It's just a matter of time.
Moving on to Marcoola. So this is another Terry McKinnon loan. It's a splitter block in Marcoola, Queensland. For those who are in Marcoola, it's going to need about a 6-month extension. So in about a week's time, we'll be communicating to Marcoola unit holders about the rollover and if they wanted to extend their holding or redeem. So that'll be coming shortly.
Just to add my little 2 cents worth, because I can't help myself. Marcoola, it's located on the east coast of Australia, the Sunshine Coast, so they're not making any more of that oceanside living. So I would expect that there's probably been a little bit of a price uplift, and it's a great location. It's just taken a little bit longer than we had thought to get his planning approval, but it should go well.
And then I'll move on to Toowoomba. So they're building 11 townhouses and 1 detached dwelling there. Progress continues to be strong there. This also received a bit of an extension because of the rains in New South Wales. So this was rolled over on the 8th of December for approximately another 6 months, where most unit holders did roll over. So paying 11% for a first mortgage, and we continue to like it. Progress as well. Our development management team on site each month, they're very impressed with how it's going. So we're very happy with it.
There's nothing for me to say about that. You've covered everything.
About Barrel, Joe, any updates?
Look, we caught up with the project sponsor, you and I think, and another member of our team had a catch-up coffee. They're close to getting their planning approval, so they've had what's called an RFI from council. They've responded to that. So look, between you and me, I don't think much will happen between now and the end of this calendar year, but probably in late January, early February, there'll be a bit more to report once everyone comes back to work at council.
Yep. Moving on to the Junction. So this loan just continues to power ahead. We've got a first paying 10% and a second paying 17%. We actually had our videographer on site, and they just recorded a video that's on our YouTube channel. So feel free to have a look at that, and you can see the progress. You can meet the developer, you can meet the builder. It's just flying along. There's constant construction claims for this one. So if you are interested in the first or the second mortgage, be in touch, because there's availability, and there will continue to be availability for the foreseeable month. So a great update, and we're extremely happy with the Junction.
Can I tell you, I thought that video was outstanding. This is a loan that you actually originated, Xander, and as it says in the slide, it's the third and final stage. There's so much to like about this. I mean, they're building a product which is residential housing stock. The vacancy rate in Ipswich is less than 0.6%. So this is they've sold down stage 1, they've sold down stage 2, this is stage 3, paying 10% for the first and 17% for the second. I really like it.
Yeah, me too. Just to talk about our newest loan, Palmwoods. This was settled at the start of December. This is the settlement was to settle the land, and then they'll have about 12 months to get all their relevant approvals. We've taken town planning advice, and we're confident that 12 months will be enough time. And then when they have their approvals, they'll be building 7 townhouses there. So we've got a first paying 10%, a second paying 16%. And those who want to be part of the construction, it'll be about a year's time, but one to look out for when that comes around and they've got their approvals.
And again, I can't help myself, otherwise we'd have the last word. I think you did a great job. We've got a full 12 months worth of interest provision there, so I think that's a lot of time to get their approvals. And Palmwoods is a lovely little town in the hinterland of the Sunshine Coast. I think it'll be a lovely spot for some townhouses to be developed.
Me too. Do you want to just tell us a little bit about what's going on in Narangba and the updates there?
Yeah, look, Narangba, they've amended their lodgement with council. They're looking to get a slightly higher yield. By that we mean more townhouses than was originally expected. And so we're told that construction should commence in February 2026. And they're doing something that is new for us, which is a modular construction. So what that means is that effectively the townhouses will be prefabricated within a factory in Brisbane actually, and then they're shipped onto site. The benefit of that is not so much a cost saving but a time saving. So they manufacture quite quickly. Our development management team and one of our other portfolio managers was on site to do an inspection in Brisbane last week. They were very impressed. So that's something to look out for. Again, townhouses, very close proximity to transport and retail amenity and Brisbane itself. So I think it'll sell very well.
Yeah, me too. And then I'll just talk about the two residual stock deals we've got at the moment. I'll start with Yalambee. We've got a first mortgage paying 10.5%. There's 3 lots left on Yalambee, 2 more and we're fully repaid. This was expected to finish around November, December this year, but they're just going to need a slight extension into January, February, and we'll be providing an update to those unit holders in Yalambee. But it's going to sell down. It's a residual stock. It's completed. And we're very confident that it'll be repaid.
Can I tell you too, I mean, we do a lot of beautiful stuff, but this stuff is, Yalambee's at Bunya, which is northwest of Brisbane CBD, 4,000 square metre blocks. You can wave with the koalas in the bush reserve. It is beautiful stock.
Yeah.
You know, it is beautiful. It's some of my favourite stuff we've done. So there's only 3 left and only 2 more to sell, and we're out of it. But it's been a cracker.
And then Sanford Rise, so another residual stock deal, first mortgage paying 10.25%. We had one settlement in November and another settlement in December. So for unit holders, you'll be receiving a return of capital on the 15th of December. So look out for that. We'll have construction draws for the junction and other loans, so you might be able to put that money to work in there. Or it's kind of a nice segue into the credit fund, where if you do have a return of capital, the credit fund's always open. The credit fund has 2 redemption windows, the 15th of March and the 15th of September. You've got to give a month's notice for those windows. It's always invested. You can really build a position in there by reinvesting your distributions. Did I miss anything there, Jay?
Look, the only thing I would say, I think you've covered it really well. It's set and forget, so you're getting a broad exposure to all of the portfolio of assets. And as you said, you can build a position so you can reinvest your distributions and set and forget. So it might suit those people that are just wanting to, get their 9% yield and just park that money, not have to think too much about it. So it's a very good fund.
And just to regroup, we missed out on 2 of our childcare loans. So I'll just start with Minto. So Minto continued to go well. They've actually done a little bit on site, bit of site clearing. So we've got a first and a second on that. And in the new year, there'll be some construction draws for that one. So that's one to look out if you're interested in construction of childcare. And then we've also got one at Kembla Grange, Stream Hill, which was one that we settled last month. And that's just a land loan on a operating childcare centre that they're looking to get a development approval to increase the yield to about 120 kids. So from about, I think, 30 to 120.
I think you're correct.
So that won't have any draws, but maybe this time next year we'll be talking about construction draws for Stream Hill. So well, thank you for listening to the December update. Everyone have a great Christmas, and we'll be back probably February next year.
I believe so. Thank you so much, and all the best.
All the best, Joe.